this stuff from a meta level. Like understand like why are we paying taxes? Because we like smooth roads. Why are we paying taxes? Because you go to a state school that there's tax money from. Like we all benefit from taxes in some way. And I just want us to be able to look at this stuff big picture and we can get into the nitty gritty. So if today is like, well, what do I need to pay? And, and what do I need to look out for? You're wrong class. Like there's a really good Linda tutorial that's going to get you started. There are great professors at Eastern that teach tax law. You should see them and you should get an accountant. All I'm trying to do today is get you some foundation so that I'm pretending today like you've never heard of taxes, period. Okay. And that's really what we're trying to do today is to start from like first principles. First principles is why do we pay taxes? Because we share things. Okay. All right. And then also we're going to talk about the objectivity and subjectivity of taxes. We're going to talk about what it actually means to be rich. What does it actually mean to have gender? Right, from an objective, and so, like, what does that have to do with taxes, Colin? Like, what doesn't make any sense? And this is how I need to start thinking about this stuff. All right, so we're gonna go about 45 minutes, right? If you just came into class, like, we're gonna go about 45 minutes in this lecture because typically it's 2 hours plus long, plus other classes. All right, dig in, do what you need to. All right, dig in. We're gonna get started on this. All right, taxes. All right, I believe there's a show on TV somewhere about how the lottery ruins your life. It's absolutely, it can. Why? There's a lot of subjective reasons for this, right? Well, one, maybe there's people knocking on your door. One of the rules that I hate is in the state of Washington, that I hate, a capital H hate, is if I won $1 billion in the lottery, right, my information is made public. I want to be able to win $1 billion in the lottery and not have anybody know. Okay. So in other states, you can win $1 billion and no one would ever know. You're anonymous. All right. So this is part of the tax laws. Okay. I'm leaving Idaho. They don't make it anonymous. But again, I'm going to say stuff today and like, you should check up on that. Like, really? Yeah. Check on that. But I know in the state of Washington, right, they make it public. So why is this like, that this is going to be my face? This woman down here at the bottom, this is me and her, or I would have the exact same reaction. Like, oh no, I know this is going to get bad. Well, why? Taxes. Okay. All right. So the goal today around is to understand the concepts around taxation, not to become a CPA. Okay. People study this their entire career. They're hired professionals. Okay. All right. So basically the things you need for this is like understand the difference between your personal and business taxes. Understand this, like where does that line drawn? And that is not a clearly drawn line. How much do you take out of what you make as a business owner and take home? How much do you keep in the business? I can't tell you what that is going to be, but you need to start thinking about that. So if one of you landed a $10,000 project, I'm like, great, that's awesome. I'm glad that you got that $10,000 project. But now you have to start thinking about it in terms of taxes as a individual and also as a business. Again, individual and a business. Today, we're going to have to be able, I'm going to put this in bold, you're going to be able to have to make that distinction. Okay, you are going to be able to make that distinction. You're going to have to be able to justify to the federal government, like, no, this is where I start and this is where my business starts. Okay. All right. The other thing here is you can Google for all the stories around celebrities and people who don't pay their taxes, right? Pay your taxes, right? Don't ever say, Colin didn't say pay your taxes. Pay your taxes. Nobody says, woohoo, I like to pay my taxes. I haven't met a single person that gets up that is, I can't wait to pay my taxes. Okay. Good. All right. I don't want to get into, there is a whole subjective part. There's a whole part of our society that believes you shouldn't pay taxes, that we should live in a society that should pay zero taxes. There's also a part of our society that wants to pay more in taxes. And I bring all this up because this is that subjectivity that I need you all to start thinking about, right? And there's an undercurrent to all this is vote, vote, vote. And if you haven't voted that yet, right, I'm going to say this on the record. Shame on you. I'm going to repeat that. If you haven't voted once in your lifetime, shame on you. Subjectively, Colin is putting on his opinion hat, right? So and this is local, state, and federal, because there we have, why am I saying this? Because we have local, state, and federal taxes, right? And if you haven't voted for your councilman, if you haven't voted for the mayor, if you haven't voted for a governor, right, or even the president of the United States, like, shame on you. All that affects your taxes, right? And if there's one, if one of the things that the takeaways from today is you get to vote, then you should do it, because that affects your taxes. All right, lastly, hire an accountant. Right, I'm gonna be very, very frank about this. Get an accountant, right? And then understand what they're saying. Understand what they're talking about, right? When they're talking about the difference between your business and your bank account. Two different things. All right, so I'm gonna show you this very old letter, right? There was a $150 workshop that I was asked to give at the library. And I was like, no, I'll do it for free. Right? This is great. I'm gonna teach kids how to code. This is gonna be good, right? We're gonna make websites. And they're like, I want to do it for free. And I said, no, we have to pay you contractually. We have to pay you. And if we pay you this $150, you have to fill out this paperwork and read all of this and understand what's happening, right? I'm like, yeah, I've been through this. Like, no, I'll do it free. They're like, no, we need your tax identification number, because I was doing it not as an individual. I was doing it as my business. Like, my business is going to come in and teach you how to do these things. $150, right? Between all the back and forth between my time, their time, and just the stamps alone and the electricity for the email, okay? You can begin to see here how all this stuff gets really, really complicated. $150, 2 workshops. Okay, so this is very old. The rules have since changed, right? But this is what I'm trying to talk about. Even though I was like, I'm going to do this for free, and like, we can't have you do this for free. You can't come in and do this voluntarily, right? For all these other legal reasons. Okay, and I keep bringing this old example up because I want you to understand, right? That this stuff is everywhere, right? And we have to get used to it. Okay. All right. Put on your adulting hats. Today is about the most adulting day that you're going to get. All right. Hire an accountant. Hire an accountant. All right. Tax laws are very, very complicated. There's no room for errors. Hire an accountant. Some of you aren't listening to me right now. All right. Federal tax laws are even more complicated. Hire an accountant. Oh, my links are broken. I have a link to finding an accountant, right? But here are all the list of the local Spokane CPA firms. Okay. Here's just the top 17. All right. Find one you like. Talk to your friends. Talk to your parents. Talk to other business owners.
What if we have like a friend who's also an accountant? Would that be like
separation? You want my personal opinion?
Yeah.
Don't mix friends and money.
Okay.
Right? My accountant's not coming over for dinner. Right? He's not getting a birth announcement. Right? That's my opinion. Now, subjectively, you can feel however you want about it. This is just you're asking for my opinion. That's my opinion, but that's it. All right. Again, hire an accountant. Right? These are the reasons why. All right, Colin, I need a different voice on this. Awesome. These are 2 very good LinkedIn tutorials on Lynda, right? I've been through them all, trying to find the best one that's going to work for professional practice. New ones, new courses on this stuff gets added to Lynda because tax laws change, because how we vote changes, because how society changes, and we'll talk about all that stuff on here. All right, now here's the only fun part of the lecture of today for me. This is the only fun part to me, right? We get to talk about this stuff conceptually. Okay, we get to talk about this stuff in terms on the stuff on a meta level, and we get to talk about why this image right here gives me such anxiety, right? So this person goes on to The Price is Right, that game show, and the team, right, the spokesmodel, the whatever they're called, right, the team of people, the Price is Right staff, there you go, Price is Right staff, right, she accidentally flips the wrong card, right, and so this person was supposed to lose the game but won, right, so she's like, oh, I accidentally won the game, right, because of a mistake the Price is Right made, right. I'm telling you right now, if I have to go on The Price is Right, I want to lose. I want to lose. Why? Because what happens, what we forget about this, and The Price is Right, and there are lots and lots and lots of articles on this, right? Not just this one source here. And this is true of a lot of game shows, right? Even Jeopardy, right? Every time I hear about all these big Jeopardy winnings, right, my brain instantly goes, ooh, that's going to get dicey in taxes, right? So this individual right here won a $157,000 car. What the heck is an Audi R8 Spider? We're going to look up, right? There you go. Run this awesome car, right? That looks, this even looks expensive, right? They won it. WONE won it, right? And then basically The Price is Right has always said, like, look, if you can't pay the taxes on this thing, you can't drive home with it, right? So, right, the car required her to pay more than $61,000 on this car in taxes, right? So a lot of people just leave their winnings at The Price is Right because they don't have the money to pay the taxes on it, or they don't want to pay the taxes on it. My feeling is I don't want to pay the taxes on this boat. Yeah, Colin, you want a boat on The Price is Right? I'm like, oh my gosh, keep your boat. Right? And what is the thought? Well, I'll just sell it. Right? Why am I using that voice? Why am I using that really condescending voice? Because we hear that a lot. Right? I'll just sell it. You still have to pay the taxes on it. And you have to pay the taxes on selling a car. You have to pay the taxes on buying a car. Right? You can't leave the taxes on this. This is the point I'm trying to make. So subjectively, I don't want to be on The Price is Right. Objectively, you're going to have to pay taxes on your winning for what you win on a game show. This is what I need us to understand. Like, this stuff is everywhere. Okay. All right. We good in this part? With me so far? Emojify. Let me know that you're there, please. Yeah. Otherwise, I'm really talking to the ether here. All right. Rich. How can rich be subjective? Okay. What does it mean to actually be rich? Oh, do we have time to actually play this video? Oh, I'm going to hold off on this one. All right. If we have time, we'll come back to this, right? This talk, it basically means is how you define rich, right? Subjectively, how do you define rich? So I don't have to fix the screen sharing here on this because we need audio. So give me 1 second. Let me end screen sharing. All right. While I do that, yell it out. How do you define rich? Give me a number.
Someone who can live without worrying about where their food or shelter is going to come from and can buy in excess of that.
Oh, excellent. All right. That's a good definition. Anybody else? How do you define rich?
Monetarily, it's hard to define just because if you're single, you can be rich with 100,000, but I don't know. I would say like for a family, like 250 by yourself, like 150.
Anybody else? How do you define rich?
There's also different kinds of rich because like there's like rich and then like super rich.
Yeah.
So there's the objective version of this, right? And then there's this. That's all subjective, right? Not good, bad, right? That's subjective. What we're trying to get to is how do we define like objectively rich? Taxes. Simple answer. Tax brackets. Simple answer. Tax brackets. Okay. All right. So here, let's get into this while we're here. All right. Can you hear the audio?
In January, Senator Elizabeth Warren proposed.
Can you hear the audio on this? Okay. Yeah. All right. Now this is trying to define rich objectively. Okay. Not subjectively, objectively.
This is a chart of the wealth of every single American household. That includes cars, houses, yachts, jewelry, and even cold hard cash. It also includes things we owe other people, like student loans. So let's take a quick tour of American household wealth. We can start over here, where we see people who owe way more than they have. As we move further right, we can see, oh, that's me. And there's my doctor, who owns an expensive home. And there's former heavyweight boxer Mike Tyson. But when we get to the very richest people in the world, oh hey, it's Beyonce. We can zoom out so far that this chart looks like a stick, and we still can't see the top of their wealth. Because these people are so much wealthier than the rest of us. In other words, this chart doesn't just show wealth, it shows the staggering wealth inequality we have in America. But recently, politicians have been talking about an idea that's never been done before in America. To even out wealth, we should tax it. In January, Senator Elizabeth Warren proposed something called a wealth tax. This was a big deal, because this doesn't typically get taxed. Most of the taxes we pay only happen when money changes hands, like when we earn money or spend money. But according to Warren, here's the problem with that. This bar represents my wealth, and this is my friend's wealth. I think he owns a yacht. But because both of us have the same job and earn about the same amount of money, our income gets taxed about the same.
Two people who may have the same income, but are in wildly different economic circumstances.
So to fix it, Warren wants to tax the actual wealth people have, but only for the very, very rich. Here's her proposal. All the wealth above this line, $50 million, would be taxed at 2% each year. All the wealth above this line, $1 billion, would be taxed at 3%. So if you have $40 million, you'd pay nothing.
Oh.
If you have $60 million, you'd pay nothing on your first $50 million, but 2% on the $10 million after that, or $200,000. And if you have $2 billion, you'd pay about $49 million. So what would happen if we imposed Senator Warren's tax? Well, only the richest 0.05% of Americans would pay this tax. But in 2016, the government could have raised about $200 billion from it. That could pay for a plan that makes public college tuition free 3 times over. It could pay for all federal food assistance programs, like food stamps, 2 times over. It could get close to cutting child poverty by 60%. These are massive programs that would help millions of people. And what makes that possible is the huge amount of wealth stuck here at the very, very top with the ultra rich. A wealth tax hones in on that.
We've started this paid membership program.
All right, this becomes a different class and a different lecture if we have a lengthy discussion on this. But look, at this point right here, right, we can get, right, people can get free education, right? People wouldn't be growing up on food stamps and welfare. Like we wouldn't need these food service programs, right? We would cut down child poverty. So why haven't we done these things? Because subjectively, right, people have opinions about this and they have voted differently, right? And having a discussion about whether or not how people should spend their money, whether it should be taxed, that's a subjective discussion that kind of derails us from where we're going with this, right? So go back to the beginning of the lecture. Shame on you if you didn't vote. So, Colin, is this your goal this morning to make me feel bad about this stuff? No, I want you to actually. The goal this morning is for you to avoid this right here. We're going to jump to the end of this. Right, this is from the old lecture, quote unquote old lecture. Right, the goal for this morning is so you don't get into this issue. Right, me before an accountant, I thought I had it figured out. I effed up huge. Right. And then me after accounting. Well, I have 2 options. Hope that the IRS doesn't notice, that they're going to go, oh, okay, he's small fish, we're not going to come after him, right? Or pay the $1,000. And I want you to hold on to that. Hold on to this idea. And then we can come back to the end of this lecture. I'm going to ask you, what did I do? Right? Did I let the oversight go? Or did I pay the money? Okay. All right. So, married. How is married subjective? Right? Again, this becomes a different class. If we have to define, right? If we have to discuss, right? Not have to. If we choose to discuss, choose to discuss what does it mean to be married? Well, subjectively, I mean, objectively, sorry, right? This figures into taxes, right? So you can check that box that says, I am married and I want to pay less on taxes. That is my child. I want to pay less on taxes, right? Are we good in this part? So part of the reason this becomes a longer lecture is because, you know, I listen to what y'all have to say about this stuff, right? And it gets kind of heated. The tax lecture gets heated, right? Because people have really strong subjective feelings about how we define marriage, how we define rich, right? And I just keep coming back to is like, y'all, different discussion, different class. I want us to get to the objectivity of, can I check this box that says I am legally married, right? And we, right? And I know a lot of people in life who have gotten married just for tax reasons, or people who stay married just for tax reasons. Okay. So employed, subjectively, right? You can decide, hey, I'm going to choose to work under the table and not report these things. That's the subjective part, right? Like I made this $10,000. No one's going to take it from me, right? Are you going to, yeah? Well, why do we have objective tax laws, y'all, about whether or not you're employed? Because otherwise, this is how the mafia works, right? This is how anything illegal works. So why? All right, subjectively, the society and the federal government can feel however they want about drug trafficking, right? Or any of the other things that are deemed illegal. Objectively, they just want to get in between the transaction of money. Okay, I had a student in class that said, you know, they had received tens of thousands of dollars for their wedding. I said, that is great. I would hate to pay the taxes on it. And their eyes lit up. And they looked at me and they go, what are you talking about? I said, you didn't pay the taxes on all that money? It's a big gift, right? Otherwise, hey, I'm a mafia boss. That was my gift to that person, right? So much so that in Japan, right, the Yakuza, you can look this up, Japan, not Yakuza, right, is basically, they're an incorporated business. The quote unquote Japanese mafia, I'm gonna put that in quotes because that's subjective, is an incorporated business. I want us to be able to look at this stuff objectively and subjectively. And we have to be able to view it from both lenses. All right, as Trenton, looks like you have a question here.
Yeah, I was wondering, like, how do they tax a gift? Like, so the government has the right to tax it, even if it's just there's no like exchange, like only one side benefits.
Well, but just like we looked at that video, right? It's all it's your earnings, right? It's no different than all right, then I'm going to the diamond and the gold trade, precious metals, all that stuff is heavily regulated for those reasons, right? Otherwise, you can say like, I'm going to bypass all tax laws because I get all these gifts. And
Okay.
how they define that is well outside of this class. Okay, and what those numbers are and where the lines are drawn, that's what people vote on. Okay. All right. So the different types of taxes, go ahead and follow this link right here on your own time. Okay. All right. So remember again, you and your business, you are simultaneously both an employee of your company and the owner of your company, and you're going to be paying taxes on both. And if you think that that's not fair, that's the tax law. But it kind of makes sense, right? Because if you take a $1 home, you're an employee. And if you work for $0, that's slavery. Right. So these are the big conceptual meta things that interest me to no end. I love talking and thinking about this stuff. This is the stuff that kind of bores the rest of us. Like, yeah, just tell me how much I owe in taxes. Let's not talk about this. Okay. So whatever works for you on this, right? Understand that we really can't separate the two. Okay. All right. Good with me? All right. So you need to fill out forms both as an employee and a company owner, okay, at the same time. If you follow this link right here, this will give you all the liabilities, right? A good 20-second line of what your tax liability are, right? Basically what you're gonna be owing. Okay. All right. Here is Colin's old chart, and hopefully this old chart still appears. Every time I give this lecture, I'm like, oh man, there's a CPA sitting in the audience somewhere that's gonna take my chart apart. I've revised this chart to really kind of get it down to making sure that we understand this. So everything under income here on the screen is this, right? It's what you made. And the government says, we're going to take some of that. Federal, state, and local government says, we're going to take a portion of that. Okay. And you're like, all right, fine. So that portion still exists. But then they say, well, we're going to give you deductions and credit. Okay, and later on, we'll talk about certain deductions and credit, having a child, right? In your case, student loan payments, small business credit. And why are there all these deductions and credits? Because they want to benefit society, right? They want small business to exist. The health of an economy, if small businesses are doing well, the economy is doing well, right? So we have all these laws in place to make sure that the economy is doing well, right? Hopefully, okay? And we can argue subjectively how we feel about all those things. But so you take your taxable amount, which is this color right here, and then you take your deductions and credits, and then whatever is left is what you actually pay. And if it's in the negative number, right? Anybody guess what that is? If it becomes a negative number, starts with an R. You love getting this every April.
Refund.
Mm-hmm.
Tax
Refund.
refund.
That's how you get a refund, because your employers, right, pay taxes all year long on you. You're a tax liability, right, to everybody you work for. Okay, and we need to look at the word liability in objective terms, not in subjective terms. Okay, all right. So everybody clear on the broad overview that we can apply this to, right? Instead of saying income, this can be revenue. Okay, so if we're looking at business terms, this is income. This is how much revenue your business made. Okay. All right, let's get into tax brackets. All right, so the great people at Vox are once again going to explain how tax brackets actually work. Okay, and this is hotly debated in the news.
These are tax brackets.
And so I'm glad they made this, because this is was always one of my pet peeves. It's like, no, wait, that's not how tax brackets work. Here's how they actually work.
These are tax brackets for 2019. Simple, right? But many of us make a common mistake when looking at this. Let's say my income is $84,000. You might think that puts me in the third bracket, so I would owe the federal government 22% of my income. This is wrong, and it's causing us to have uninformed debates about tax policy. Here's how it actually works. Let's go back to my $84,000 income. Now, instead of thinking of tax rates as brackets, we should think of them as pockets. But first, there's one special pocket we need to talk about. The money we put in this pocket is not taxed. The government automatically lets single people put $12,000 in this special pocket, and more for couples. But if you spend a lot of money on things like medical expenses or charitable donations, you can sometimes put in more. These are called deductions. With the $70,000 that's left over, we can start filling up the pockets. The first pocket only has room for $9,700, so I only pay 10% on this money. Then I pay 12% on the money in the next pocket. And then 22% on the money in this pocket. These are called marginal tax rates, and that's how these brackets actually work. So if I get a raise, that new money goes into the first pocket with empty space. When space runs out, we put it in the next pocket. So the raise, and only the raise, would be partially taxed at 22%, and partially at 24%. So when politicians say they want to raise the top tax rate, doesn't necessarily mean these pockets and your money are affected. They're talking about tax rates on the pockets way over there, which are only used once people have filled in these smaller ones. Marginal tax rates are a pretty simple concept once you get the hang of it. So the next time a politician says the government wants to take away 70% of your income, just send them this video.
So
at around go ahead.
So does that mean like the first few pockets are essentially protected from tax if like you have some overflowing in the top one?
No, protected is wrong.
And not protected, but
yeah.
like it's like it can't. I'm trying to like come up with like wording.
It's taxed differently. It's still taxed. It's still taxed, just taxed differently. It's taxed at a different rate. So
the first one, I have to pay 10% of that. For the next one, 12. Okay.
Because 0 is still a number. 0 is a really important number. So if we get into this around the 18-second mark
of my income, federal government.
Fit the 58-second mark, right?
More for couples.
Right, and more for couples. How do you define a couple? Vote. All right, how do you find technically, right, objectively, right? There are countries that pay way more in taxes. 50%, 60% of their income goes back to the government. How do you feel subjectively knowing that for every dollar you make, 60 cents of it is gone? Okay, so these are all things that we need to start thinking about. Okay. Oh, adulting. Isn't adulting fun? Just love adulting. All right. So understand your tax brackets. Okay. Understand tax rates. There's even more on this stuff, right? We're watching YouTube videos all day long if you wanted to. Right? This idea of, Linda has a really nice course breaking down the simplified tax brackets. Okay. It's a good place to start. Okay. So why is this important for you, Colin? I never want to start my own business. Well, if hopefully you saw in the video that you have to think about your raises. Well, don't I just always want more money? Well, it changes things. Right? It changes stuff objectively. That's taxes. All right. We're gonna kind of gloss over deductions and credits, right? Basically, right? That's that part right here. Right, let's say you're owed $100 and you have $50 in deductions and credit. That means you're going to pay $50, right? For taxable income. Just working with easy math here. Okay, so let's go ahead and take a look at some of our deductions. You can get a bigger picture of what a quote-unquote tax break is, and this is why people incorporate in different states. This is why some people avoid living in certain states. Some states tax Oregon and Idaho have income tax, right? We don't have income tax, right? And there's some states that have sales tax, and there's some states that don't have sales tax. Okay, why is that the case? Why are there all these variances? Because people vote, right? So subjectively, right? If you haven't voted, shame on you. Because you have a say in how this stuff goes. Now, objectively, different class, different discussion, right? I don't want to hear about like the effectiveness of voting. Different class, different discussion. Right? What I care about is looking at this stuff objectively. Okay. All right. So more deductions and credits. All right. Oh, here. Get into that. All right. I'm trying to find the list of deductions and credits. All right. This stuff changes. Okay. Typically, what you're looking for, right, is what can be, so a credit is before, right? So let's say you owed $100. Okay, the tax credit is going to reduce your taxable amount, right? Deduction comes after your taxable amount. Okay, and let's take a look at some of this, right? So why are there homeowner credits? Because the economy benefits from you buying a home, right? Why are there healthcare credits? Because the economy benefits from this. Why are there education credits? Because the economy benefits from this, right? And so what you just say to yourself, right, subjectively is, well, what other things could benefit society? Okay. All right, other deductions, okay? You can, if you're, I mean, this is going to sound ridiculous, but if you're a hand model, right, you can probably deduct the lotion that you use to lotion your hands as a hand model, right? if you know, my ties were a part of like a necessary requirement for my job, right? I could probably look into getting deductions on all that ties and bow ties that I have to buy, and sweaters and slacks, and my dry cleaning bill. So why am I saying all this? Let's go ahead and skip down to the bottom. Okay. All right. Oh, before I get into skip down to the bottom, lastly, we have a thing in the US called a standard deduction, right? Basically, this is what everybody gets off the top, right? And this is kind of to help. I can't go too far into this because I'm not an expert in this stuff, but right, the standard deduction is what's good for the economy at large, right? Otherwise, we're all going to otherwise we're all going to be paying. Otherwise, you're not going to get a refund. That's the short version. Okay, so that's why we have a standard deduction, and this gets argued about. Like, what is the standard deduction going to have to be? Okay, and so for a joint couple, it's $24,000. Okay. Right, you can kind of do the math on this, right? If you're paying, if you're owed $24,000 in taxes, right, you can kind of guess what you're making in terms of your salary. All right, let's go ahead and skip down the bottom here. All right, here is a very rough estimate for overhead. I'm gonna change my screen sharing here. All right, so in past classes, typically what you're gonna have to do is complete a form that looks like, come on, Zoom. We spend a lot of time working through a form that looks like this, right? This is the overhead for your business, right? And this stuff becomes complicated, right? Why? Because, well, if you work from home, like a lot of us are doing right now, right? Can I start deducting my internet and my electricity, right? My business is out of my house, right? There are deductions on that 100 square feet that I've deemed a business in my house. Okay. And so that's all. So some of my utility bill, some of my internet bill, so on. Okay. Now, what about the roof over my head, or my homeowners association fees? Yeah. And right. And so without getting into the nitty gritty of this stuff, is like, well, can you deduct Netflix? Well, yeah. If I'm a video producer, if it's important, if it's crucial to my business, right? Can I argue that Netflix? Yeah, that's where you have an accountant. This is like, all right, this is how much of your Netflix bill you can actually, like, this is so long ago, Netflix was $7. It's not $7 anymore, right? Adobe Creative Cloud, isn't that essential to your business? Right? You can reduce that amount of taxes owed. So you run through all this and you figure out what is it going to take me to run a business? And that's part of your expense. And some of those expenses can reduce the amount. Yeah. And that same concept, right, applies to you personally. Right? And so the student loans, house loans. Yeah. Wait, so what can't be deducted, right? Food. Right? Unless, you get where I'm going with this? Unless food is essential to your business in some way. Okay, everybody with me? Thumbs, check. With me on this one? All right, we got like 5 minutes on this. All right, so once you have all that data there, okay, once you have all those numbers, we're going to have a very, very rough. This is so rough, okay? Because I came up with this because students started saying, like, I just want to see some numbers. I'm like, fine, all right. So I'm gonna preface this, take this with a grain of salt, or whatever the saying goes. Okay, let's go ahead and take a look at some very, very rough numbers. All right, so let's see here. You can zoom in on this thing. All right, so what I want you to do now is think about how much you made. All right, how much did you make? Right, who's like, okay, think about how much you made, right? And you can go ahead and download this chart and just plug this in, right? So basically, let's say, like, all right, my business brought in $50,000. Okay, easy numbers, right? And then basically your expenses that table we just looked at is like, how much did it cost me to make that money, right? That's gas, that's paper, that's Adobe Creative Cloud, right? How much did it cost you to make that money? Right, let's say it was 5,000, right? So that's really like what it can take you home, right? And the government says, all right, we're going to tax that $45,000. All right, so if we run through this, right, we take the federal, it's self-employment tax or state income tax, right? And we basically made this, Washington has no income tax, Okay. And again, that 13.3% is half of that is you as the company owner, half of that is you as the company single employee. Okay. All right. It becomes your taxable amount, right? And that's how much you owe. Right. So let's think about this. Your business made $50,000, right? And if we take this really rough chart with a grain of salt, right? You owe the federal government $13,000, but you made $50,000. Fun. Okay. That's why we get an accountant. Okay. Get accurate bookkeeping. Yeah. All right. Good, good, good. All right. Let's come back to this and let's wrap this all up. So in your own time, okay, go ahead and follow any one of these Washington State talent calling. I never, ever, ever want to be a business owner. Great. Here we go. Right. Let's say you're out of school. Someone offers you a job for $50,000. Right. You're going to stay single. Right. You're going to tell your bae. Can I still say bae in 2020? That's still a thing. Karina, bae, boo, bae, boo, bae, boo. I grew up on.
Yeah.
I grew up on boo, and somehow I changed to bae. Anyway, let's go ahead and calculate that.
Either one.
Okay. Do. Right. There's your take-home pay right there. So you just got offered a $50,000 job. Colin, how does this apply to you? How does this apply to me? Here you go. This is how this applies to you. Right? Don't start planning. Don't start budgeting for $50,000. Start budgeting for $41,860.50. That's how I need you to start thinking about this. This is the takeaway from all of this, right? This is the time you should start listening. Yeah. So if you're away from your desk right now, come back. You're away from your computer, come back. This is the chart that you need to look at. Okay. All right. Good, good. Right. This is what you're taking home hourly, right? Someone says, hey, we're going to give you $25 an hour to work at this job. You're like, awesome. I can't wait to make $25 an hour. Really, that $25 an hour becomes $24.04. How? Taxes. All right. So we got all these generators. Okay. If you just want the hard and fast numbers, here you go. Okay. All right. As a company owner, all right. So where we're going to conclude here is the forms. Okay. As an employee, you're going to get a W-4 from your employers, right? And if you've had a job before, you know what that looks like. And then in return, you're going to send a W-4 to your employer. Okay. Now, if you've had a job, you've seen this form right here. Okay. And then once a year, or about once a year, you should get something like this from your employer, a W-2. Okay. All right. Good, good. All right. So now we're getting to the practical components. Okay. All right. So can you have multiple W-2s? Yes. That means you have multiple jobs. Right? You have multiple people that are basically telling the government, right? Everybody you work for is saying, no, tax my business less because I hired Colin to mow my lawn. Right? Every employer is telling the federal government that they're paying taxes on you, right? So the business wants to pay less. You want to pay less, right? The government wants as much as possible, right? The government wants what it's owed, excuse me. Objectively, the government wants what it's owed. And it's that tension, right, that we're trying to balance. Okay, you want to keep as much as possible, I'm assuming, right? Your businesses want to keep as much as possible, I'm assuming. Right? The government's saying, hey, we want what's owed to us legally, objectively. Okay. All right. As a company owner, right, you're going to, right, have a lot of, we'll fill this one out, right? And notice right here, this is our employee identification number. So if you go back into the lecture where we talked about, incorporating your business, and some of you are like I'm never going to, I don't know what this has to do with anything. And I kept saying, we just need this one number. We just need this one number right here. That's that number, right? That is a social security number in quotes for your business. Otherwise, if you put your social security number in here, they're taxing you, the individual, not your business. And that distinction is massive. That distinction is important. This is why we incorporate, right? Who owes money, you or your business? Those are two very, very distinct distinctions that we need to make. All right. Now, if you're going to contract, you're going to be a, all right. In addition, at least, good to know. All right. Oh, here we go. It's $600. All right. All right. So if you're going to do a lot of freelancing, okay. Right. And you get a bunch of these 1099s, that means you're doing good. Right. If you're a freelancer and you're doing a whole bunch of these you got all these 1099s coming in, you're like, yeah, it's been a good year. Right. So you're going to do some work for some people and they're going to send you one of these. And what I want you to say is, I don't know what the heck this is. Right. So if we take a look at this right here, it says at least $600, right? In what? Rents, prizes, and awards, all the way back to the beginning of lecture. Or any fishing boat proceeds, whatever that is. I don't know what fishing boat proceeds are, right? At least 600. So what it basically was saying in here is, if I do just one project in a year and I say, give me $599, right? I don't have to fill out this form. I don't have to have this form sent to me, right? I can keep that as personal income, not make it taxable. You could make that argument, okay? So the point we're trying to say here is any of this miscellaneous income, rents, right? Let's say some of you decided to rent an Airbnb or become an Uber driver or anything else. You're like, all right, I'm going to stop driving at when I have $599 because I don't want to pay taxes starting at $600, right? And so when I look at this in prizes and awards, well, how do you define prizes and awards when you're talking about gifts from the student who got a lot of money for their wedding, right? Well, that was a prize and award for my grandmother. My grandmother gave me a prize and award for my wedding. Okay. All right. So that is it. I understand these forms. Okay. Again, there's more and more on the required forms. We would go through all these, but I think we're good. We're 5 minutes over where I wanted to be. But what I'm hoping today is enough to get you started. Okay. That is my very long TED talk on this stuff. All right, we good? All right, last lecture is Monday, next Monday, the 1st, I believe. Yep, our last lecture. I wrap everything up. The client is reviewing your designs, and we'll get those back to you. We'll set a due date for enough time for you to get feedback. Excuse me, enough time for you to get feedback and then make any potential revisions. Okay. If you're behind on your daily engagements, get caught up. Okay. Universities ask that we use week 10 to give you time to treat that like it's finals week, and then not to make sure that week 10 is condensed. So no questions? We good? All right. Have a good day. Go register to vote. There, right? That's my subjective statement for today. If you haven't already done so, go register to vote. All right. Have a good day.